Hello friends, today I'm going to talk about a different topic. When we get into a trade every day, we don't know whether the market is going to trend up or trend down or when I will take my trade. So that's the biggest puzzle, right? So how do I decide, okay, if I am going to take a trade now or if I'm going to wait for it or the minute I take the trade, the market reverses or the minute I sell off, the market goes up. So how can I get the information? How can I make a decision on that information? Is that what I'm going to talk about today? Okay, so I'll be showing you some tools which can help you to make that decision. Okay, so now on the screen you can see the Bank Nifty June future. Okay, so I'm now focusing on the 26th of May 5 minutes chart. Um, so you can see here the 5 minutes chart being put in, and I also plotted 20 moving average and also the VWAP. So these two things are there. If you look into it, you see the market was flat here and it was not trending much, and you are not sure whether the market is going to go up or down. And there is also a couple of resistance here close to the candles. One is the previous day high, and next is the opening range high. So, and also you have this R1 and R2s. So you have quite a lot of resistance close to the candles. So I don't know whether I should make a decision to buy or sell, right? Because the trend doesn't tell me anything here. If you take between 9:15 till 11 o'clock, I didn't have any trend. It was very flat, some small candles here and there. It looked more consolidating, but this consolidation, will it take the market up or down? I don't know. So let us focus on this. So till 11 o'clock, I didn't know what is going to happen, right? So I have a separate tool which I use from Open Interest Pulse. This is called trending OI analysis. That is trending open interest analysis. So there I've added all the strike prices from 43,000 to 44,400. What this basically will do is this will calculate the open interest for the call and put and plot it as a graph and show me which one is trending, whether call is trending or put is trending. So basically, what will happen is if a call is trending, if you have more open interest in call, that means calls are being sold. If you see open interest increasing in put, that means open interest increase notifies that put being sold and market is trending up. So this is how you make the decision. So the graph simply gives you that idea. So at 9:15, the graph starts together and they keep moving up, right? So at one point there is a crossover. That is, put is crossing over the call, and call open interest is coming down, and open interest is going up. That means market is reversing. You can see on 26th at exactly at 12:05, the put crossed over the call open interest, and you can also see here the sentiments, right? Trend sentiments at the 12:05, sentiment is also positive, turning positive. So these two confirms me that market is going to trend up. Okay, now let us see in the chart what happened at 12:05. Okay, if I keep, yeah, this is 11:05, this is 12:5, right? 12:5. So as I said, right, I had two resistance. One is previous day high, and other is the my 15 minutes high. So both have been broken, and I have a bullish candle at 12:05. So my trend indicator also saying that uh, put is trending and call is going down, and sentiment is also up at 12:05. So I can go ahead and buy the market at 12:05, and you can see the market turned out really well. So this gave me a very good profit, right? So, okay, let us compare this for a couple of other days. Okay, so let us see for this day. This is 25th. Let me change the date to 25th. Okay, on 25th, if you see, I don't get a major trend here because the market was going flat here and there and all those things, and it just changed at the last minute. Why? Because 25th is an expire, and you see most of the out of the money calls and puts will go zero. So this is not going to give you a major trend here. So let us skip 25th. Okay. So let me go to 24th. Okay. So look at 24th. So 24th, I had a crossover at 9:55. The sentiment also became positive at 9:55, and also there is a crossover at 9:55. So the puts are increasing. So what happened at 9:55? 55, 55. So market was at a positive zone, and it is just above that. See, one thing here you need to note here is there was a narrow CPR on that day. That means you have a strong resistance at the pivot or the CPH or CPL, right? So this is going to be a very huge resistance. So at 9:55, I see even if I get into a market, I'm going to make only a few bucks. Still, you can make it if you want, or I won't take a trade because I'm not going to make much profit here. Okay, I would still get 50 bucks, but if you're looking for more than 50, then you don't take a trade. Okay, then let us see when the market reversed. So again at 12:45, the calls got up and the puts were coming down, and the sentiment also was going negative at 12:45. So what happened at 12:45? Yes, see 12:45, the markets came down. It is below my VWAP and 20 EMA, and clearly shows the trend is down. I take a trade at 12:50, and keep a stop loss above that line with the candle. And from there, you can see the market really went down. So it gave a very good profit of 200 points, right? Okay. So let us see the another day where we have a very flat market. This is somewhat a flat market. If you see 23rd, and let us see how 23rd turned out. Okay, yeah. 23rd, if you see, I don't see the crossover happening anytime in the market. See, put was going up, put was separate and call separate, and they didn't cross over at all. The sentiment was positive, but the crossover did not happen. And if you look into the market also, it was like dilly-dallying here and there, it's going, and it didn't give you a clear buy or sell signals here. Because every time you buy one big candle, and you had another red candle, you had another green candle like that. So this is a day we need to avoid. And also, if you look into it, right, you had a very wide CPO. On a wide CPR, your market is going to be very volatile, and it's not going to give you any great opportunity for trading. Okay, let me see one more day for the flat market, 22nd. Here again, 22nd also, I didn't have any crossover. You see, calls and puts were separate and they didn't cross over. The sentiment from the beginning was negative. So, the first candle itself was a huge red candle, and then the market was very flat. You didn't have any opportunity for buying or selling, so the market was very flat. So, basically, I just shown you a couple of days, and you can see how this is helping us to make a decision. Okay, let me also show you one more day where you had a trend that could have helped you to make a decision. Okay, this is about trending day. So 17.5. So 17.5 you see exactly at 9:55, 9:50, 9:55 then crossover happened, and also the sentiment turned negative. So most likely the market will trend down. Okay, let's see what happened. 9:55. So yes, so 9:55. So the candle is also below my VWAP 20-day moving average. I'm good for a short. So I take a trade at 10 o'clock, and I keep a stop loss 100 points, and then see the fall. You made a killing on that day. Okay, so this is how this trending open interest helps you to make the decision, and so that right you can see whether the market is going to trend up or trend down, and that helps you to make your proper decision and minimize your losses. Thank you, friends.